Today we have Kirk Taylor, Chief Financial Officer of Royalty Management Holding Corporation, which trades on the NASDAQ under the ticker symbol RMCO. Kirk, thanks for being with us today.
Yeah, thanks, Bear, for having us. Pretty excited to get into our business and the exciting things ahead of us.
I agree. So, Royalty Management recently commenced trading on NASDAQ, positioning the company to capitalize on organic and inorganic growth opportunities. Let's start with a brief overview of the business.
Yeah, so Royalty Management Co., like you said, RMCO on NASDAQ, was founded by innovators in the infrastructure space. It was seeded by friends and family funds that really believed that there needed to be a new breed of royalty investments made. We take a step back and we say, what is infrastructure? Most people think of roads and railways. While that meets the standard definition, will that meet the definition of infrastructure over the next 20, 30, 100 years? And so RMC is really built to take advantage of those opportunities of investing capital today to meet current cash flow, meet current trends, but with an eye towards what's next, what's future in each of those industries.
Very exciting. Thank you, Kirk. In a recent press release, you commented on the higher interest rate environment and royalty management's ability to provide alternative capital solutions. Talk to us more about this unique position.
Yeah, so in your traditional mining royalty space, many mines that are junior miners, they are going through their pre-feas, permitting, or feasibility studies, are unable to raise capital in today's capital market environment as well as interest rate environment. What royalty management can do is provide early stage capital to those traditional mining assets to get them to the next incremental level, either in production or approval, to allow them to expand their business plan and go in the future. But for that investment, royalty management is able to take a royalty stream off top line of future revenue production, allowing it to insulate itself from rising cost environments that we're seeing right now in the inflationary commodity environment.
Royalty management is targeting industries and businesses undergoing significant transformations. What can you tell us about this investment approach and how you balance profit and benefit?
Yeah, it's a great question. So like I said, what is infrastructure today? It's going to change over the time, right? So not only are we investing in the building blocks of today's infrastructure, whether mining assets that go into current day steel production, mines that go into infrastructure markets. We're also expanding the view of what infrastructure will be in the future. The building block of life is water. And for many people, water is an automatic. You turn your handle and water comes out. That's not true for everybody in the world. It may not be true for us going forward. And so Royalty Management Co. has taken an investment in a great Austin, Texas-based company called Heartwater, revolutionizing how rainwater can be captured, purified, and bottled for consumer consumption. Those types of expanded viewpoint to what infrastructure can be allows Royalty Management Co. not only to drive current revenue by generating interest income off of investments, but also making sure it has a seat at the table of what infrastructure will be in the upcoming generations.
Thank you, Kirk. I understand the business is very forward-looking, but able to adapt to current market trends now. Speaking of market opportunity, how big is the total addressable market opportunity?
Well, every junior miner in the world needs capital to advance. As some mining assets are pulling back in your traditional power generation industries, others are advancing forward in the critical element and rare earth space. Goldman Sachs has called copper the next oil, right? As we look at electrifying our economy, how can Royalty Management Co. play in that space? We can invest wisely in known operators who need that incremental capital to push their copper mines, their lithium mines, their rare earth mines forward to institutionalize their investment base. So those are the things that we're focused on right now from a traditional mining space. We have team members actually over in Africa as we speak this week, looking at opportunities. We have investments already placed in South Africa in operating mines. When we made the investment, we took them from pre-operations through permitting to operations. So already success-driven case studies already for such a young company, and that expands the network of opportunities. The funnel is so important for royalty companies. We need to have viable projects always coming to us, ready and willing to take our capital. And having those early stage successes helps that funnel increase and increases the quality of opportunities that we continue to see.
Thanks, Kirk. Let's go ahead and talk about that business model. How does royalty management make money?
Yeah, so we really have three different revenue generation lines. The first is your traditional royalty, which I mentioned. We invest in a pre-operating mine or a set of mining permits. We help expand that and advance that forward to commercialization. And for that, we take some sort of percentage off top line sales. Very traditional model. Investor themes generally like those types of models. Again, in inflationary environments, you're generally insulated because as prices go up, so do the price of the commodities, and so our royalty streams go up with it. The second aspect is investing using a convertible note structure, which includes interest payments. So not only are we generating current income to your prior question through a collection of interest, but we also have conversion rights in case of liquidation events for our targeted investments. So in the case of Heartwater, our convertible note structure allows us to generate current income. And if they were to be acquired for some large multiple, we would also be able to achieve capital appreciation. Most royalty streams right now in the marketplace do not have that tremendous upside as we structure our deals. And the last would be fee and royalty income from environmental services. We have active traditional infrastructure operations that are generating current royalty streams today, and also rental income from owned real estate and land holdings that are also currently generating income.
That's great. Thank you very much for that explanation, Kirk. My next question has to do with management. We all know that management is the key to success for these smaller cap companies. So who are some of the key players on your team?
So I continued on from our SPAC. So Royalty Management Co. went public via a combination of a special purpose acquisition company. So I transitioned from CFO of the SPAC into Royalty Management Co. to make sure that we navigated the challenges of a newly public company seamlessly. We met all the deadlines. We transitioned to a fully reporting operating company. And I want to make sure that Royalty staff had the proper runway, right, to navigate those challenges. Royalty's CEO, Tom Save, has spent 20 plus years in the commodity industry, both as an operator, as an investor. Before focusing on U.S. assets, he spent a significant amount of time in the Caribbean and in China, looking at infrastructure assets, making investments, then divesting them when the time was right. And so by those networks of 20 plus years, we have a pretty good funnel, like I mentioned, of deal flow. And then we have a great team of on-site personnel, both from admin, back office, as well as actual boots on the ground, checking out opportunities, making sure that portfolio packages are put together the right way, that there are no hidden worries to be undiscovered until after deal closing. So by leveraging the history and the experience of the team, we're able to make these deals seamless to both parties, and then position the company for strong growth in the future.
Sounds great, Kirk. It seems like you fellows are already doing a fantastic job. In summary, what is the essential value proposition? Why should investors take an interest in royalty management today?
So two things. One is that from a combination with a SPAC perspective, the combination was a clean combination in which there were no structural overhangs from the SPAC, right? So most D-SPACs carry with them significant amount of baggage. Royalty Management Co. did not have that baggage to carry along. From a structural standpoint, it's a clean entity. From a business standpoint, it is so poised for growth. They've made significant investments before the combination. Those are already materializing, already generating revenue. And now it's really either expanding those current portfolios or starting to exercise on top 5, 6, 7 opportunities that have been vetted, have been approved, and just need to go move forward. So it's a really exciting time for the company. Um, Appreciate your interest, and again, we're on Nasdaq RMCO, and excited to share our public journey with everybody.
It is an interesting story. Thanks for sharing it with us today.
Thank you.